Thank you all for signing up for understanding the importance of financial reporting for business growth for real estate professionals. I'm Margo, your Heartfelt CFO, and I am so excited to share this with you so that you and your business can grow in ways that you have not known and beyond your wildest dreams. In case you are new to me, I have started Heartfelt CFO and Tax Services about 3 years ago. I have seen many different things for real estate professionals that I've grown a practice to support you no matter where you are on the entrepreneurial journey. I want to share this information with you because I noticed a gap in the financial reporting sense, and I wanted to make sure that you have it. In the dynamic world of real estate, having a clear, accurate picture of your financial health has been such an important inclusion with practices that we have built, and it really has been driving growth. What we do is that we help create financial reporting package that gives you what you need. So for instance, you can have a real estate business expansion going on and you really don't know exactly what's happening, but the numbers are happening in your head. So what we like to support you with is showing you what could happen when you actually implement reports. So it involves a systematic collection of items on a regular basis. So it could be analyzing and presenting things that is happening on the regular basis. It does a lot. So the first thing is that it helps us make informed decisions. When it helps us make informed decisions, we know it's not throwing spaghetti against the wall. It's actually coming from a place of clarity and from information. What we also know is that if we see things that are happening in operations and growth that we don't like, we can have the time to make improvements. This is where doing things on a regular monthly basis is going to help you versus at a retroactive, because at a retroactive, you don't really have time to fix when things are happening. Performance tracking. This is one of the things that unfortunately people don't do, and it's something that we keep track in our heads, and we kind of have like these specific ways that we think that we're tracking things, but it may not be a tangible item. So when you track your business's performance over time, identifying trends and areas of improvement. For instance, if cash flow is consistent, or if your projects are having consistent times when they're needing change orders, you're not paying vendors with proper cash flow, you're not able to pay payroll on time, you're needing to borrow to pay payroll. A lot of these items become really, really important in the real estate field so that you can see improvement. We have a dashboard that would support you on this, that if any of you are interested in that, I would love to share the CFO real estate dashboard for your convenience. The third part is compliance and transparency. This ensures regularity and it helps improve things with your investors. What I hear a lot is that all of a sudden people have investors and then they don't have the proper reportings to actually give to them information around the business. It becomes very general and very global and not specific enough to really know the trends and what's happening in the business. We also want our lenders and our stakeholders in the business to have good feelings about the business. I know this sounds so simple and cliche, but something going down to just having the right information, that it's not just thrown together from AI these days or items like that, that it's really true to our business. The next part of this is a financial assessment. I really just renamed this and I call this health assessment because it just highlights your profitability and the debt levels of the business. It's so common for us professionals, when we want to do things, we can take out another credit card, we can take out more loans, but a lot of us don't look how cash flow can really support the business. Now, having debt or loans for the business can work, but we have to have a plan with the debt and with the lines of credit to pay back so that it's intentional. If we don't have a plan for our money is going to have a plan for us. The key components of financial reporting is really to leverage reportings. Now, reportings can mean different for a lot of different people. And the first one I just want to introduce you to is the income statement. A lot of you may know these. A lot of you probably have background in this information too, but it's really getting more intimate with our income statement, really knowing where our revenue came from, knowing where our profit is from, how much, and I say it like that because really knowing and understanding your profit is really, really the key to be able to pay what we talked about before, payroll on time, our vendors, and all of those different things that grow the business. When you have insights on the profitability, those are your clues and your keys to your next steps. And without those clues and keys to your next steps, we can't make changes and can't help more people in the industry if we don't see the trends that are happening. The balance sheet is so underused, and if we looked at a snapshot of what we own and what we owe, it really could give you a stability factor in the business. Let's say you were away on business and you wanted to see if something was happening in the business, like how much sales are coming in, are your tenants paying on time, are the bills being paid on time? There's so many different factors in the industry, but what you want to see in the balance sheet, what you own and what you owe. What I find as a CFO is that the important items are not on the balance sheet, which is how much you paid for the asset, how much you owe, knowing the principal and interest is also important, because let's say that there is extra cash, and that is possible. You want to know where to put the money. So it could be sometimes people pay off assets before getting new ones or getting a loan. All of these decisions are helped in the balance sheet. And what I notice is a lot of professionals, unfortunately, have this hesitancy when it comes to this because they just want to make the next, they want to just buy the next building or take care of the next sale and things like this. However, these are your own little assessments that could happen. The cash flow statement is just highlighting what you are actually doing. Are you generating cash? Are you meeting your obligations? Are your fund operations being active? Now, all of these different things in cash flow are so important. And lots of times people are measuring the success of cash flow when they call the bank in the morning and they see a positive bank number or possibly a negative, and they judge from there. The difference between book balance and bank balance is really key, and hence why monthly reconciliations are so important. Now, some clients we've had across the years and do have even been doing regular monthly reconciliations. Now, people, when they talk about reconciliations, they have different ways of doing it. I'm talking about the actual function within QuickBooks to actually match the bank versus the book to see what we have in front of us and the different components that we may not be paying attention to. Now, budget versus actual. Here's an item that nobody, I find, or very little, or our clients do this because it's part of the process. When you compare actual performance against your budget, identifying variances and necessary adjustments, it becomes an item of knowing how to price out your next jobs. Job costing is one of the hardest items that I find professionals have to do, because a lot of you real estate owners are in some ways doing construction, some ways doing developing. It depends upon how you niched off, and understanding the actual versus the budget and really taking the time to slow down can help you, may even slow down to speed up, and also to slow down and actually see that Maybe you don't need 20 deals a year, maybe just 5, and implementing these steps that we talked about today, you can get so much more and then have the guilt-free time off with your family, or use the money to do other things too. So having time with your family, unfortunately, lots of times we don't realize the importance of it. I remember for myself, I would say, as long as I did, let's say, dinner with my kids every day, I thought that was enough. Or if I went there on the weekend with them, all of a sudden I have 2 adults and they're truly leading their own lives. And we don't realize that every day we have a chance to be better at ourselves, better in business, which then gives our kids so much more. If I were to tell you that my 21-year-old has made a business and my daughter is on her way to a career in architecture, I would be like, wow, how did those humans come out of my body? So, building a life of wealth through real estate can really take you to different levels beyond your wildest dreams. So, key performance indicators and financial ratios such as ROI, debt to equity, occupancy rates is a big one, and provide a deeper analysis. Now, again, we have a dashboard that will support you, but I want to know what you have first so that we can make these dashboards work for you. Now, even our baseline of it will work, but what will happen is that we want to make it comfy to your business. So applications of financial reporting, I want you to consider the example of a real estate developer who implemented robust financial reporting practices. By meticulously planning and analyzing their financial reports, they were able to allocate funds necessary for property upgrades, which unfortunately, and I say that's a lot here, unfortunately, those upgrades become like an issue instead of like, hell yeah. Enhancing the appeal and the value of the assets, accurate financial reporting, and a steady cash flow during town markets. These are the high-level things through the process that our clients are able to work through and to get to so that there's steady income for family, for future generations, and also for the team that you have. Another example is a property management firm that used financial reporting to plan for seasonal variations. By predicting slower periods, they were able to build a financial cushion. During the peak times, that steady cash flow helped maintain throughout the year what we were able to do, noticing the lower periods than the higher periods. So cash flow did not become an issue when we did this in the project management realm. In conclusion, financial reporting is an indispensable tool for any real estate business aiming for long-term success. By efficiently managing your current finances, you can navigate the market and definitely the fluctuations that happen. Embracing this will help you be competitive and also be, of course, profitable. Now, lots of times people are saying, I'm already profitable, I just need more strategy. They go hand in hand. So I want you to think about where you're at this process, that you can have a thought to think about what you can do by listening to this, that we can add one more step, one more strategy to the business so we can increase profit. Now, I'm actually going to stop sharing 1 second. And I prepared a few graphs that I also want to show you. Actually, sorry about that. Okay, lots of times people don't know where to get started. Just want to make sure I'm sharing actually the right screen. So bear with me. Okay, awesome. Lots of times you're doing these things yourself, or you have a secretary who's doing it, and you're wondering how to get started. Now, hopefully it's with my firm that you want to move forward, but I prepared this infographic that I wanted to start to introduce you to on what you need to start to get forward with your finances. What we start is, and we talk about, is the will and determination to master the process. Too many people are just hiding around the process, and they're just hoping and just thinking that it will possibly just work out or work itself out, or they just got used to this way for a really long time. The second thing is that you get intimate with your finances. Now, when I say get intimate with your finances, as weird as that sounds, it's really getting to know things from a way of how it works for you, and is it working for you? Because that's our starting point. The next part is that there's somewhat of a time commitment. Even though it's an outsourced component, you're still working together with our team, or whoever you might have or to choose to be able to master this process. Every time you put a little bit more effort into this, it becomes better every single time. And one change every day, one change every week, you'd be surprised how quickly this will go. The next part is openness to questions and coaching. We can suggest everything, but if you're not open to the implementation of it, nothing is going to change. If you go back to your old ways and don't look to implement what we talk about, then nothing is going to change. And the last part is overcoming the urge to bail. Lots of times people just they want to run, or it's the last thing they want to do. We look to make this as fun as possible for you. So when you have that urge to bail or not call or don't ask the questions or not respond, be like, hey, I want to, but I'm having a tough time, or in some capacity like that. No matter where you are on the entrepreneurial journey, I guarantee you, I've helped a client or clients that way, and you're not alone, and we don't want you to be alone in that process. So the other thing is that what we talked about today, just to sum it up, of why financial reporting matters: informed decision making, performance tracking, financial health assessment, and then compliance and transparency. When you bring this together, this is why it matters when you're deciding where you are of how to put it together. The other loop I just want to close with is that the key components, what we talked about, which was income statement, balance sheet, cash flow, budget versus actual, and financial ratios and KPI. I hope you enjoyed this. And like I told you, to get started, these are the things, and it's more of a mindset to close than it really is here more information. I want to see how you're doing, and please respond, say hello, ask me the question so I can help you no matter where you are. I thank you for coming. I thank you for listening, and I look forward to hearing all your questions.